Hey everybody, we are in week 3 of the entrepreneurship class, and this week I've called it legal matters, but as you'll see there are other things in this as well. So we're last week with name and logo. I thought it was kind of more fun. This one we really get into the nuts and bolts, dimensions and concepts that are going to need to be studied. So let's get going. Here's the big recommendation. So I'm actually been kind of anxious about putting together this presentation because I'm not a lawyer and I'm not an accountant and I'm not an insurance agent, but I'm one who studies these concepts, and as one who had a small business for quite a number of years, I'm aware of the importance of all this. So I'm going to kind of take this presentation from kind of a higher level, not so much nuts and bolts. This week, I will provide more references, more sources for you to check out through reputable online resources. So the Small Business Administration, Entrepreneur Magazine, entrepreneur.com, and then the videos that I choose, I'm going to make sure that those are from good, well-respected companies. So I'm going to you'll see this in the assignment this week. There'll be a lot more references for you to do some research, then apply it back to your interest as well. So really all the entrepreneurship classes and the things that you read, and you're hearing me say it right here, you really need to find someone who is a lawyer and who understands how all this works and what all the implications are. You need to find an accountant, and the accountant's going to know the tax law, tax code, inside and out, and be able to give you the best advice possible. And then actually, strangely enough, right before turning on this computer, I was texting an insurance agent about my commercial property. So my policy, we're switching carriers and having to figure out what amount of coverage I'm having to deal with and what the premiums are going to do and how to pay for that. And so this stuff's real, and it's stuff that you must be aware of. All right. So those are my 3 pieces of advice. Really, find someone who knows the law. Find someone who understands the tax code and how to report income and take care of expenses and do depreciation and all those other things. And then find someone who's going to help you out with insurance and make sure you're covered in case something happens. All right, let's get started on legal forms of business or legal structure. I think I'll put this in the second week and kind of the first topic because this really should be at the heart of your thinking and your organizing and your planning when you're structuring the organization. So kind of hand in hand with the name and the concept, we should really be looking at these ideas as well. So this is something I borrowed straight from the SBA website, and it does a little comparison of the major forms of legal structure for companies. So the 3 dimensions across the top, they talk about ownership, they talk about liability, and taxes. And those 3 dimensions are the ones that you'll see on almost every single one of these comparisons, how we analyze these different options across those different options. And then you see going down the side, sole proprietorship, partnership, and then you see some corporations down there at the bottom. Those are kind of the 3 big ones, sole proprietorship, partnership, corporations. And then we've got some hybrid forms and we've got some kind of specialized forms as well. So sole proprietor, already brought this up. Sole proprietor in the US is the easiest to get into, especially if you're operating under your own name and you don't have any kind of special licenses or permits. It's pretty easy to do. Licenses and permits, which we'll cover later, you'll see will just require a little extra work. But the 3 dimensions, so sole proprietor, the owner is the business. It's a one owner, sole proprietorship. They kind of named it that on purpose. So tax-wise, if you're operating under your own name, the business's tax ID number and your Social Security number probably going to be the same thing. Now, if you have a assumed name or you have employees with an employer identification number, you might get a different number, a taxpayer number assigned. But at the most basic form, it's the Social Security number. That's what it was in my case. Liability. So the big disadvantage with sole proprietor is that the business and the person are the same entity legally. And so if something happens at the business that then results in a lawsuit or something bad happening to the business, it's also going to happen to the individual. So that the owner is going to be liable for any of these things that might happen in a bad way through the business. Taxes. Tax, again, that other 3rd dimension. Taxes, so if you're working by yourself, there's going to be self-employment tax, but the income that comes in is reported on your own individual tax return. That's one of the big advantages of sole proprietorship and partnership, and even LLC to an extent. So kind of recapping, sole proprietor, one owner. The owner and the business are the same legally. Unlimited personal liability. If something were to happen, the owner could lose everything. And then the taxes, it's reported on your own individual tax return. Partnerships. So this is two or more people. And if you think about a partnership, why would you have a partnership? It's because the other person or people can bring in complementary skills and knowledge and abilities, connections. It could also be that they bring in some resources. So on this, where it says liability, it also has unlimited personal liability unless structure is a limited partnership. So with limited partnerships, we have to also kind of bring up the idea of a general partner and a limited partner. General partners are those people in the partnership who are engaged and involved in the day-to-day running of the enterprise. And so they're entering into contracts, they're making deals, they're making commitments, they're maybe taking out loans for the partnership. If something happens, the general partners are going to be the ones that they're going to come after. They're also limited partners or silent partners. Limited partners are people who invest in the company, but they intentionally and legally written up, they're not involved in the day-to-day running of the partnership. And so when the general partners make some bad decisions, the limited partners are going to be limited in their liability to the extent that they invested in the company. Okay, taxes, so also self-employment, except for limited partners, and then it's also on the personal tax return as well. So it comes down, the partnership makes money, and then it's reported on the personal tax returns for the partners. Let's go down to corporation. So a corporation is its own legal entity. It's its own thing. And it is, there are different types. There's the C Corp, there's the S Corp, there's the B Corp, and then down at the bottom is really it's the nonprofit. But with a corporation, as its own legal entity, it files its own taxes. So if they're on the tax dimension, C Corp pays the corporate tax. All right, one of the disadvantages of corporation as a form legal structure is the idea of double taxation. So the corporation makes money, profit, it has to pay tax. And then it spins off some back to the owners through dividends, and those are going to be taxed too. So double taxation is one of the disadvantages, and the corporate rates can be higher than the individual rates. So the ownership in the C Corp, one or more people, the owners are not personally liable. It's going to be run by, if you think about a big corporation, run by a president or a CEO, those are people who are hired by the owners through the board of directors, okay, shareholders, to run the company. And so the company is its own thing. The owners kind of step outside as shareholders and they hire others to run it. So the corporation provides that liability that sole proprietorship and maybe partnerships do not. So S Corp, B Corp, those are just different forms of a corporation that have different requirements to them, and they're going to have certain limitations, but those might work for you as well. And so again, just becoming an expert on that. Nonprofit corporation, again, if you're interested, remember that from week 1, we talked about the profit to the nonprofit continuum as sources for organizations that entrepreneurs can start. So nonprofits are just required to set themselves up and operate differently. We'll come back to that later in this presentation. And then that LLC, so the limited liability company, this is one that came about by a lot of people who were sole proprietors, maybe smaller businesses, who kind of wanted some of those protections of the corporation, but they also wanted to keep the benefits of being able to file under their own personal tax return. So a limited liability company with the logo and name presentation, we talk about protecting that at the state level. And I brought up in particular the Secretary of State and registering your name with the Secretary of State. These LLCs, they're slightly different across states, but you are able to protect your name and operate within your state. Limited liability, it becomes its own thing, but it's run by members, managing members, and then those managing members may have to pay self-employment tax, and then it can also then cycle down either through their personal tax or, I guess, a corporation could be part of that as well, or as a corporate tax. So with that, these are the big forms. I encourage you to do some extra research. I encourage you to talk to some attorneys and some professionals. Think about Division of Labor and Adam Smith. Think about people who specialize in these concepts and really get the best advice possible. So explore these. I set up as a sole proprietor and came in one day and realized there was some stuff going on that with exercise classes. We were doing a judo class. We were doing other classes where there was getting to be it's quite possible that somebody could have gotten hurt. And if I wasn't there, I still could have been held liable. So ended up switching over to an LLC and then investing in a lot more training for my people to make sure that we were all on the same page and that we could reduce the risk as much as we can, which we'll also bring up later in this presentation. All right, licenses, certificates, and permits. So I've already hinted today, and I hinted last week, said if you do a sole proprietorship and you don't need licenses or different certifications or permits, sole proprietor is pretty easy to get into. But there are certain businesses, certain things that you do where you do have to be licensed. And so I pulled this from the SBA, smallbusinessadministration.gov website. There's the link down there, and I'll also provide it in the assignment as well, so you can click over and look at it yourself. But if you are involved in these businesses, in these industries, you're going to have federal permits. Okay, so agriculture, alcoholic beverages, aviation, firearms, commercial fisheries, mining and drilling, radio and television broadcasting. Those are things that are regulated and overseen by the government. All right. Then these are ones that I collected from Entrepreneur Magazine. Had a great article. There it is. And again, I'll provide you the link. These are different licenses that you might be required within your state. So the states are going to be different, but these are some of those that are kind of most common across them. So a business license, and you will see that when this is written up, some places require you to actually have a license to be able to do any kind of business. Other ones it's going to be more free. Okay, where you just go get your DBA and just get to business. Zoning license, you need to have your facilities, your business in the right part of your town or county. And so if you're doing industrial things, you may need to be out of neighborhoods. If you want to do retail, there may be certain places where you can locate or not locate. So zoning. Fire department, okay, so when they come in and they say how many people are allowed in this to be okay with the fire department. And okay, health department, so health department, particularly if you're involved in food, that you have to have that. Air and water pollution, sign permit. I remember in a previous town that there was a big to-do about businesses out near the highway wanted to put up very large signs, and the county got together and said, nope, you can't have them that big. So those are sign permits. So if you have a sign, there may be requirements about how big it can be, where it can be located, a lot of different things. County permit. So in this article, this entrepreneur article, it said just like city licenses, there may also be county permits that you have to have as well. And then other state license. Okay, if you're a mechanic, electricians, plumbers, contractors, you see those are ones that we want to be protected as a public, that we're not just having crazy people coming in and building things, repairing things, not up to code. And so auto mechanics, electricians, plumbers, building contractors, they have to be certified with the state. Collection agents, insurance agents, real estate brokers, repossessors. And then that one down at the bottom, anyone that deals with the human body. So barbers, cosmetologists, doctors, nurses. It's to protect the public from crazies that might just be out there trying to do their own things. So if you're involved in any of these types of businesses, those are ones where you are going to have to get a certificate or a license or some type of permit through the state, through the county, or maybe even through the city. Okay, become an expert on this. Seek out those resources that'll be able to help you out the best. All right, here's another one. So this is, so I talked about legal forms of business, legal structure. These are actually forms. These are actually things that you as a business owner need to be aware of, and at different times you may have to draw upon. So gave a great a link to a great resource down there, that lawdepot.com. They just had a bunch of them on there, and you can click on them and see exactly what they mean by that, and then do some additional research. But liability waivers, a lease agreement, trademark assignment, we've kind of already talked about that. These are just some that I included from that big list on Law Depot that seem applicable to business people. So, even on the other side, cleaning service agreement. With our Airbnb, we have a deal, an agreement worked out with a company up in that town that comes in and cleans for us. Articles of incorporation, so they're going back to either LLC or forming a corporation as well. Mortgage agreement, okay, a consulting agreement. If you consulted to come up with something that would be agreeable, kind of an enforceable for both parties. So just a quick little list, but it's a lot more complicated than we initially realized once you start digging in and looking at the details. But I'll give you the link to this website, and I encourage you to go in and take a look. All right, here we go. Let's go on tax return. So Schedule C, so sole proprietorship. Schedule C 1040, Form 1040, tax return. Here's the description of this that I just borrowed right off of the IRS website. So use Schedule C to report income or loss from a business you operated or a profession you practiced as I highlighted that in turn of colors, sole proprietor. So Schedule C, if you are a sole proprietor operating under your own name or an assumed name, this is where you report your income and loss. And then look at these two bullet points. So it says your primary purpose for engaging in the activity is for income or profit. And then the second one, and then you're involved with this on a regular basis. So this is where you need some help. What's the difference between a hobby and a business? What's the difference between my brother saying that his granddaughter wants to play saxophone and I've got one and I'll sell it to her for $120? Is that a business? Or is that helping out my friend and just kind of getting my cost back? Does that need to be reported as income, or does it really meet that definition? All right, so I'm not going to answer it. I'm going to let you all answer it. So Schedule C, sole proprietor, income and expenses from doing a business. All right, so here's what 1040 looks like, and you can see in that green box on line 8, that's where you report your other income. So you report on line 1, your wages, salaries, and tips. You report capital gains and losses. You report other forms of income. And on line 8 is your other income from Schedule 1, line 10. Here's Schedule 1, and I've got line 10 is down there at the bottom. But in particular, let's look at number 3, at line 3. So on this one, Schedule 1, the directions, I put them over there in quotes, again, straight from the IRS website. Additional income, such as unemployment, prize award money, gambling winnings, and then deductions, student loan interest deductions, self-employment, and education expenses. So on line 3, that's where you report your business or loss, income or loss from Schedule C. So here's Schedule C, right here. So here's what it looks like. And in particular, Part 1, you see income, and that's where you report the amount of money that came in. And then on Part 2, that's where your expenses are. And so advertising, car expense, office expense, utilities, travel, taxes, and licenses. So you can write that off. If you do have to get licenses, you can put that. Your insurance, your mortgage, legal and professional services. So you do go hire the lawyers and accountants, you can write off their cost right there. So again, this is Schedule C, kind of the heart of tax time reporting for a small business. So your income, and then Part 2, you take off your expenses, and then on the backside is where you take off your cost of goods sold, and then you just take that amount and then stick it back there onto that earlier form, and that's how you do taxes. So that's Schedule C in 1040, sole proprietorship. The other ones are handled perhaps a little differently. All right, here's another one. Okay, so this is another permit, and actually it was on that list of licenses and permits. If you are selling items, sales tax, just kind of something we do here in this country. So if you sell things to the end consumer and that end consumer is going to use it for him or herself, then you have to collect sales tax. So if you're somewhere in the chain of distribution and you're a wholesaler, then selling to retailers, the retailer, the end consumer, the one who deals with the end consumer is the one who's going to have to collect that sales tax. So on this one, in Texas, you go to the state controller's office and you go in there with your DBA. You go in and tell them what you're doing, and they'll help you apply for this and get your number. And then you can set up your payment, whether it's weekly, monthly, or yearly. You can also do a yearly payment and accounting as well. So sales tax on this one, it says in particular, first, any home-based business selling taxable goods and services must pay sales tax on what it sells. Taxable goods, taxable services. So I've lived in about 5 states over the years, and what's regarded as a taxable good slightly differs, and what's regarded as a taxable service slightly differs. So most of the places I've lived, there was not tax on groceries, kind of the basic groceries. Now, if you're buying kind of junk food and other things, there would be a tax on that, but those basic kind of staple foods, usually not taxed. Not so everywhere, kind of like where I'm living right now. Services. So if someone comes and provides a service for you, well, that's not really a product, it's a service, but some services are taxable as well. And so those are going to differ by the state, and you'll just need to do some research and find out what is taxable and what is not. Let me tell you a story. So this one, strangely enough, I knew this. I've had a love affair with donuts for basically my whole life. When we were in Texas, I went to a bakery that was down the street from my business on a Saturday morning before my classes, and I went in there and ordered one thing, and it was $1. And I went marching in there with $1, and when the clerk rang it up, he said, "That's $1.08." Like, what? Actually, it's not, okay, because in Texas, if you look at this list, baked items, depending on how they're served, are either taxable or not taxable. And so in this case, donuts in a bag from a bakery carried out are not taxed. And that guy didn't understand what I was saying, and I kept saying, no taxes, no tax on this. And finally, he just gave up, and he took the dollar and said that we're done. But even with this, so bakery items, that second point, bakery items sold by a business that does not qualify as a bakery are taxable when eating with utensils, plate, knives, forks, or when heated. So this is where you have to be the expert on this stuff. So the things that you're doing, the things that you're offering, whether they be products or services, to know whether they are subject to sales tax. And so you got to go get your permit from the controller's office, at least in Texas. It's going to be probably the same in other states as well. But again, I'm going to leave that up to you to find out the particulars of that in your area. So sales tax on service, sales tax on products. I remember another state that I lived in, when we would have someone come out and fix the car or fix an appliance or fix the air conditioning, that the products, the parts were taxed, the service was not. And so when you looked at the bill, you could see the amount of sales tax. That was just on the parts. All right. But again, all states are different. And so I'll let you figure out exactly how that works in the area that you'll be doing business. All right, let's look at some other taxes, kind of some of our favorite stuff. So with taxes, we talk about income tax. We talk about estimated tax. So if you're a self-employed and you're going to be paying taxes out over a year, they're going to be taxes that are due periodically across the year. You're going to have to estimate those, hopefully with your accountant. Self-employed. So if you are doing this to support yourself, there are going to be self-employment taxes as well. That's going to tap into Social Security and other things. Employment tax, and kind of employment, maybe even workers' comp, probably workers' comp, if you're employing people. Excise taxes, property taxes. If you own your property, you're going to have to pay those. Personal property. I thought this was kind of a double whammy when I started. So I'm not only paying tax on the property, the building, but I'm also paying tax on the things that we're using inside the building. Also, that sales tax. If you buy stuff for your business that you end up using either for your business or for yourself, then that's taxed too, because you are using it as kind of the end consumer You're not passing it on to someone else. So personal property tax, franchise tax. Franchise tax, in my experience, has a lot to do with the LLC that you have to report that. I'll let you do some research on that. On the right column, I put those on. This comes from the IRS when it's talking about charities and nonprofits. So you can file for tax exemption, which then exempts you out of, in some cases, property tax and sales tax. So you'd have to file for that. That goes along with being a nonprofit. Charitable contributions. So if you are a nonprofit and people give contributions to you to help support what you do, remember the continuum? Okay, more the nonprofits are going to require benefactors and others to help keep it going. So as people give charitably, you have to be able to give them a letter saying that that was a charitable contribution, and they could write that off, hopefully, off of their taxes. And then these different types of exempt organizations. So charitable organizations, churches, religious, private foundations. So if you made a contribution to a foundation that was doing good work and charitable work, that could possibly be written off. Political organizations, and then other types of nonprofits. Again, so there's a lot to be aware of, and you have to know this. You can't get in trouble with the government doing this stuff. So accountants and lawyers, and just talking to a lot of people and getting as much information as you can to make sure you're doing it right. All right, insurance. Like I said, I've been dealing with insurance this past week. So with insurance, I found, here's something from the Hartford Insurance Company. And so these are what they recommend is the 8 types of insurance to make sure that you have to the degree that it is necessary for you. So general liability, commercial property insurance. I remember going to lunch one time with a friend, and as he was walking from the car into the restaurant for lunch, he cracked his head into an air conditioner, one of those air conditioners that sticks through the wall, and started bleeding all over the place. Okay, be aware of that, all the possible things that could happen as a business owner. Liability, professional liability insurance. So depending on what your profession is, you may need to have that. Workers' comp, some states are going to require it, other ones it may not be required. You do the research on that. Data breach is a big thing. I just got a letter in the mail about a data breach that was done at a medical facility that I'd been to this past year. Just letting me know, they're required to let me know what was happening. That commercial umbrella, and then commercial automobile insurance. All of that is stuff that has to be, you need to package it and put it together specifically for your needs as the business owner. So again, that's where an insurance agent. I've got some buddies who are insurance agents, and they're more than willing to help me out with this. The idea of insurance up there at the top, you can either assume risk, you can reduce risk, which I hope is something we always want to do. So you want to reduce it, you want to find all the things that could be trouble, and you want to kind of train and fix to make sure that risk is reduced as much as you can. Then you're either going to assume it, or you can, what I'm calling assign. You can find someone else who will take on that risk. That's the realm of insurance. So right now, dealing with property insurance on my commercial building, I could have a certain degree of coverage and pay one premium amount, or I could pay double and have more coverage. Well, what am I willing to do? It's a risk. It's all a big guess as to what might happen. But if something does happen, then how do I want that to be covered? And so you're talking about deductible amounts. You're talking about all those things. That's someone else taking the risk, the insurance company taking the risk for you for a certain cost. And so they do the math and figure out what the right price would be on that bet. And then you, as the consumer, you're kind of looking and seeing you're looking on the other side. What is the probability of this happening? And then what is the right thing for me in that moment? All right. So these are kind of the big ones that Hartford recommended, and they were on other websites too. These are the ones that you would see, I think, kind of anywhere you research. But if you want to talk to an insurance agent, you would see these as well. And then lastly, I used to use a book in the entrepreneurship class by Entrepreneur Magazine, and they had just a wonderful couple of chapters on insurance. And so fortunately, I was able to find that list here. So life insurance actually was not in that list from this link, which I will give you. But life insurance, if you go back to the idea of a partnership, and so there are 2 of us, and what happens if one of us is unable to do the partnership anymore? could we buy out the other half from the other partner? Life insurance can be used in certain cases to do that. The reference that I found on this was even with a sole proprietorship. So a sole proprietor goes to a bank and borrows a lot of money for productive opportunities, and the bank realizes that if that person dies, he or she is not going to be around to repay, and the sole proprietorship is not going to be around either. And so life insurance, that it may even be demanded / required that the sole proprietor takes out a life insurance policy with the bank, or in the case of a partnership, with the other partner being the beneficiary. So interesting. Home business insurance. Again, this is not on that list from Entrepreneur, but it's one that I found and wanted to include. So with COVID, a lot of people working from home now with information technology and high-speed internet and all this cool stuff that we have, a lot more and more people seem to be working at home. So when you write off these expenses on your taxes, you can't write off your whole house as your business. You have to designate a particular area within the house. So it may be that you have insurance for your house in case something happens to it, but you might need something in particular related to your business area. So interesting. Again, go find some expert advice on that. Care, custody, and control. Talking about saxophone. I take a saxophone in to get fixed, and then something happens to the building with my saxophone. They have care, custody, and control of it. The insurance would then help cover that. Consequential losses, business interruption. So I'm doing business, and we have a big power grid failure, and all of a sudden I can't do business anymore. How can I be covered on that? Profit insurance, that has to do with things that are already made and are waiting to be sold, but then they can't be sold for some reason. Credit insurance, money and securities, when you have money in your place. Okay, glass insurance, I've had to deal with glass recently. Rain, what happens if you're having a big event outside and you've invested a lot of money and resources and it gets rained out, right? Temperature damage. I had a friend who had a business, an ice cream business, and some vandals came and turned off the power one night, and when they came back to work over the weekend, everything had melted and the whole place was destroyed. So temperature damage, that the ice cream couldn't stand up under hot temperatures. Just all kinds of different, very specialized types of insurance. This is stuff, again, that your insurance agent would be able to help you identify for your particular needs. You try to reduce it as much as you can. You gauge your willingness to assume some of it, and then if you decide that the best thing to do is to get some help and let someone else assume it for a cost, that's what these different insurance plans are. So that's it for this week as far as the material from this presentation goes. But as I said, I'm going to include a lot of links and other resources to do some extra research from reputable sources. And then I would encourage you, as I've already done multiple times, to go find some experts in these different areas and really kind of help them give you the guidance and the proper suggestion. All right, that's it. We'll call it.